First, real estate sales slow down. Now car sales are slowing down. What is next? Because these are two big things that people purchase on a yearly basis. And I want to talk about these two reports that when you put them together, they tell an interesting story about where our economy is going in Canada. So on one hand, we've got Toronto area home prices starting to fall again. According to Royal LePage, who of course is a real estate company, and they are incentivized and they like when the market is hot. On the other side, we have new vehicle sales in Canada that just saw their biggest drop for the month of August since 2010. Now, when you combine those two things, housing and car sales, they definitely sound unrelated, but they're actually both leading indicators of where our economy is going, right? Both big ticket items that people don't purchase every day, but people make these purchases when things feel good and when they have savings and when they can purchase these things and when they feel confident about their circumstances. And right now, they're both not looking very strong. Now let's start with the housing side. So of course, Royal LePage just updated their forecast, and now they expect Toronto area home sales to end 2025 about 3% lower than last year. So back in the spring, and I think I might have talked about this, they were calling for prices to rise a little bit by year's end. They were a little bit bullish in the spring. And then the summer, they said prices would stay flat. And now they're changing their forecast again. And they're saying that prices are going to be down at the end of the year. That tells you a lot about the direction of the market, even when a real estate company as big as Royal LePage has changed their forecast from bullish to now bearish. When one broker put it simply, the market hasn't taken off like everyone expected, right? No, everyone expected, even realtors were expecting the market to take off. But if you look at the beginning of the year, I posted a video talking about my expectations for the year, and I didn't have a lot of high hopes for the year in terms of the economy, right? And in terms of real estate performing well. I'm talking about just the amount of transactions and how confident people are in real estate, and obviously real estate prices, right? I had a feeling real estate prices would have a very slow year and actually decline, or at least go sideways. Now, bottom line, there's less demand, more listings, and buyers are still in control, right? So homes are sitting for longer, people are taking their time, and conditions like home inspections, condition on sale of, let's say, the buyer's home are back on the table. But they really have been on the table now for a while. Now, in the third quarter, the average GTA home price fell 3.5% year over year to about $1.15 million. Within the city of Toronto, it's down even more, roughly 4.6% overall, with detached homes off 7.4% and condos down 5.6%. In particular, condos are dragging prices down because investors have really pulled back. Investors were the main driver of the condo market, and with fewer people willing to pay big money for, let's say, a shoebox condo or a 500 square foot one bedroom, demand has really shifted towards larger condos or townhomes, which have done very well, or they haven't lost a lot of value. In fact, we've seen a lot more demand in that specific type of housing. Now, buyers aren't rushing like they did during the pandemic. There's no fear that a property will be worth $20,000 more next week, right? People are waiting, they're cautious. They're hoping to catch the bottom. I'm not necessarily saying that they'll be successful in doing that, but this is what Royal LePage says. They believe that the bottom might not be far off. They think we're very close to it, but for now, the power has clearly shifted to the buyers. Now, I find this funny because to me, this was very obvious that the market was in favor of the buyers the whole year, from January and February till now. It was very clear that this year was going to be a tough one for the real estate market. And for me, it really was clear, especially when the Trump tariffs started happening, which I think was around February, if I'm not mistaken. So once the news of those came out, in my head, I was like, this is not good for real estate. It's not good for our economy. And it obviously hasn't been good. Now, let's talk about the car sales, because we need to connect it to real estate and just paint a little bit of a picture, right? Because this piece of information adds an even bigger piece to this puzzle. So according to Statistics Canada, new motor vehicle sales in August dropped 7.1%, marking the biggest August decline since 2010. So to put that into perspective, August is actually usually a decent month for car sales. Over the last decade, the average change has been about plus 1.6%. So for it to swing that hard in the other direction is a pretty big deal. Now, it says we sold 167,000 new vehicles across the country despite our growing population and all that pent-up demand that people talked about post-pandemic. That's barely above last year's level. Drops in new car sales have consistently happened right before Canadian recessions. Okay, happened before 2008, in the late 90s, the early 90s, and even the early 80s. These dips don't just happen randomly, right? Car sales, a major part of the business cycle. Now, why is this? Because cars are durable goods, just like houses, appliances, home renovations. They're very expensive long-term purchases, right? That not everyone makes every year, but that make at some point in their lives. And it usually is very telling of where they are and where they're feeling financially in their life. They depend on consumer confidence and access to credit. That's the key to access to credit. When those things start to slow down, it means people are tightening up. The average sale price for a new vehicle fell to about $54,800, down about 2% from last year and down 8.2% or about $4,000 from the record highs we saw in December of 2024. Not only are fewer people buying cars, they're also spending less on the cars when they do. So that combination of lower sales, lower volumes, lower prices is extremely rare and typically signals a downturn in progress, not one that's coming. So as we get more articles and information and data about different things, it adds a small piece to the overall picture that we're seeing here. Housing softening, vehicle sales really taking a hit. You start to see the bigger picture, and I've been kind of seeing this now for a while, but it's just getting clearer and clearer as the months go on. Canadians are getting more and more cautious. Credit is tightening. Now, this doesn't mean that I'm expecting like a giant crash, but it does suggest that we are already in this downturn part, this late stage of the cycle where people stop spending on these big ticket items, right? Because these big ticket items show economic growth and we're not seeing that. This is the challenge that I think the BOC faces, where rate cuts can help a little bit, but it's not going to save us, right? They can't instantly build consumer confidence by cutting rates 0.25%, right? And if they cut by 50 basis points and make a jumbo rate cut, that'll actually signal to the market how worse off we are than what we thought. It'll signal that we're really in trouble. We're in more trouble than what we thought. So they have to be careful on that front too. Because when people are uncertain about their jobs, their investments, or the economy, they don't just rush back into the market and buy houses and cars. They wait it out. If things start to stabilize by spring, especially in the US, if they avoid a deeper slowdown, we could see more activity return in the spring. But for now, all things are pointing to a soft landing at best. So let's sum it up. So we got Toronto home sales, or Toronto home prices, down roughly 3 to 4% from Royal LePage. That's what they're forecasting, which is a big sign for a real estate company to say that. We got new car sales, which just took their biggest August hit in 15 years. And consumer confidence is clearly slipping, even as interest rates ease. This does not paint a strong picture for the future. To me, it looks like our economy is cooling off more quietly than people realize. Not collapsing in front of our faces, but definitely slowing down. And it's a very silent, quiet slowdown. And I think over the next few months, we'll get an even clearer picture of how deep this could go, especially as we head into the winter and then into the spring market next year. So let me know what you guys think of these two data points from Royal LePage, that home prices will fall when they started the year positive and then they went flat in the summer and now they're negative. And then you have car sales really slowing down on the other end. Two big ticket purchase items that are strong when people feel good financially about their situation, when they have access to credit, when they feel good about their incomes and their future income potential. So let me know what you guys think of this.